Well guys, SoFi had incredible earnings once again, but is it enough to justify this price, and what did it do to the valuation more importantly? You guys know I'm going to give you guys the truth out the hype today. Wall Street obviously has an opinion on that. We're going to get into that opinion as well, and we're going to absolutely discuss SoFi's valuation because that's really the key to all this and to know what to do with SoFi stock next. So just make sure you like the video if you like getting the truth out the hype, because that is exactly what you're going to get today, guys. And I know those of you guys out there that are my group members, we actually covered SoFi's earnings just really about an hour after the call or so. Obviously, check out the pinned comment down there. Fall Frenzy sale does end this weekend where you get access to videos like that. And if you want to work directly with me to learn how to do a valuation, understand price targets, see my updated price target for SoFi whenever I put it out there, things of that nature, it's the pinned comment down there. The sale does end this weekend. Wall Street has an opinion on this, and of course, some of it I agree with. Some of it I vehemently disagree with, so we'll talk about that and get into the valuation piece a little bit as well.
Welcome back to Next Gen Investing. It's now time to discuss under 30, and today that is SoFi, which is a much different performer than it was earlier in the session, as we're now actually higher on the back of third quarter results. So I'd now like to welcome in George Tellis, Senior Markets Correspondent for the network, to break down this move for us, and I guess what seemingly resonated well with the street, because we've really turned it around since I was checking in on things earlier today, George.
Yeah, so I was looking at the pre-market. It was trading.
Oh, you mean traders playing trader games? Yeah, shocking, guys. I know, it's crazy out there, but typical Wall Street per the usual.
Higher than it dipped as we initially started the trading day, but we're starting to see sort of a resumption back to the upside on SoFi. And if you look at the top line numbers and even the bottom line numbers, they actually were quite impressive, at least from a growth standpoint, because they posted as a business around 11 cents a share versus the 8.5-cent estimate, and that was higher by more than double last year's earnings, around 5 cents. And we always talk about, or at least I bring it up.
Now, keep in mind whenever they make statements like that, that doesn't get me as excited, because when you're going from 5 cents to 11 cents or 6 cents to 12 cents, whatever the case is, that's impressive and it's great to see, but we're still talking about pennies here. Whenever somebody goes from, 55 cents to $1.10, that's a much larger jump in regards to that EPS, or, $2 to $4, whatever the case is. So you got to kind of contextualize these sort of things. Whenever you're early stage growth, that's why a lot of times valuations get so out of whack and they look kind of wonky, especially whenever you look back in the history of a company. It's because you're dealing with such small, you're dealing with pennies. You go from 1 cent to 2 cent, you just doubled. Obviously it makes for a cool headline, makes for a great YouTube thumbnail. Oh, they're doubling their EPS. Look at them. They're growing like a beast. Yes and no, you got to kind of take those things contextually there, but you want to see growth overall. And that's exactly what we're getting with SoFi. So definitely a positive there. Just wanted to make sure I make that distinction, because a lot of folks will go down there and go, well, they grew at 100%, but, such and such stock over here, only grew at 8%. Therefore, one's a better investment than the other. Well, that's not necessarily true. You got to compare apples to apples there and understand that scale as you move out a company that's reporting $3 or $4 worth of EPS. It can't double it all the way up to there. And if they could, that's an incredible, it's just one of those feats to where all the money would run to that stock at that stage. As opposed to in this part, it's not as impressive as the others. Still great, just not that super impressive like you kind of think it is whenever you hear it on a percentage basis. So don't get tricked by that.
Times more often than not, that when you're near a break even, at least on an adjusted basis, and you start showing a meaningful improvement, you do see some nice trends, which has been the case for SoFi, up around 160 or so percent of last year. And sales are also quite impressive at 950 million for the quarter, up 38%, beating the estimates, which were at 885 million for the quarter. And if you look across the board, many of the metrics for a segment standpoint were also higher. Loan originations in total were up 53%, fee-based revenues up 50%, even student loan originations up 58%, and products growth increased by 36%. So kudos to them. They're doing a great job to improve the scalability of their business. And I've talked about how...
All right, let me help that guy out there. All numbers were up wonderfully by pretty significant margins, except for Galileo tech platform there. We'll talk about that here in just a second. But outside of that one, everything else was above average in terms of growth and executing perfectly, more importantly. But yeah, the stock's actually up 300% from April. Over 300% from April. So, when they're talking about 150% here, it just kind of depends upon where you adjust the time frame. That's why where you buy and having those price targets and understanding valuation that we talk about all the time on this channel is so important. Because, yeah, if you bought kind of at the wrong time, you're not really seeing You're seeing some upside here. Obviously if you bought at 22, 23, 24, 25, you're seeing some nice upside here, but that's not where the big money's made. That's not how long-term you end up with that, great 10x stock, or that stock that 10x's for you multiple times. It's by being prudent in those buys. Not saying if you're DCAing, you just continue right on DCAing. Forget all this, right? But if you're going to set price targets and try to, buy whenever it's undervalued, that's where that discipline comes in, and why I harp on it so much, because it can make a massive difference in your return whenever you're looking at a stock, especially whenever it has a big run like SoFi's had lately.
Important factors in any business is the profitability profile, which has been improving significantly for SoFi, especially in the last 6 quarters or so. And I think that's why we're seeing a nice move to the upside in the stock. But I think the other thing is to mention,
I'd say it's probably the last, 15 quarters or so. If you really track from not profitable, but each year getting closer and closer and closer, that negative EPS number, moving in the right direction, moving towards the positive, and then eventually flipping over to a profitability. And of course, continuing to march right up, right on schedule, like they laid out for us, really years ago. And Noto has executed perfectly to that.
Quickly is that if you look at the adjusted EPS for the fiscal year, the business did increase their guidance to 37 cents from 32 cents, which is a meaningful increase by about 15%. But if you even do the math with 37 cents relative to the current price at around $31, just roughly speaking, it's trading around 80 times this year's earnings. So maybe there was a little bit of apprehension earlier today, Jenny, to kind of answer the question of why it was pulling back because of the valuation for the business, which again, may be high from a finance standpoint or a financial business standpoint, but maybe not necessarily from a technology standpoint.
And he's kind of trying to give you a reason there. It's just traders playing trader games, all the different options, all the different stuff that goes on around earnings. That's all that maneuvering was. The people that are having valuation concerns with SoFi weren't the ones selling it off this morning and putting that downward pressure on the stock when there was a lot of momentum coming into the stock as well due to how great the earnings were. So that's just silly Wall Street talk. You got to learn to ignore all that sort of stuff. The folks that have valuation concerns don't make decisions in a few hours right there on the street. Those are all the traders playing trader games. You got to learn to ignore that sort of stuff. Now, obviously, he thinks that they're overvalued there, even with the adjustment and guidance. So we'll talk about that here in just a second.
George, a couple of years ago, this stock was sort of a niche online first, mobile first loan originator, primarily within student loans. Is it safe to classify this more as a traditional bank that maybe is mobile first, younger facing today in terms of its actual financial profile?
And that is not the question you want to hear in regards to SoFi stock if we want those large multiples in the future. That's right here, as we've talked about before, the biggest risk factor for SoFi, in my opinion, is not execution, is not how good this management team is not how good their products are, and how well they will dive into the future. It is how is Wall Street. Remember, Wall Street determines your multiple, not Luke, not our opinions, not retail's opinions. Wall Street does. If Wall Street continues to call them a bank, or a bank with an online bank presence, or I can't remember what he said now, but anyways, keeping it firmly in that bank side, that large multiple is not coming for us in the future, which means we are going to get a lower stock price. Now, again, we don't determine that, but that's definitely not the type questions you want to hear being asked in regards to SoFi. You want to hear them being asked about, hey, maybe this is more of a fintech. Maybe this is more of just simply a tech company overall versus that bank with a banking component versus the way the question is being positioned right now. And trust me, these aren't the only guys saying this on Wall Street. This is a very common narrative, and it takes time for these things to sort out, right? Somebody trying to point to, and I've seen it before, oh yeah, look at the multiple right now. That tells you exactly what the multiple is for SoFi. See, they are going to get a 60 or 80 times earnings. Not true at all, guys. We're in the middle of a hot market right after earnings. This is not the multiple that's going to be set in stone forever with this stock. Oh, by the way, they're newly profitable, which means those multiples are always higher anyways, due to that EPS conversation we just had earlier on. It just shows a complete ignorance to valuation and ignorance to how Wall Street works, and just basically not understanding how earnings and how Wall Street sets those multiples over the long run. This is very, very short term whenever you're thinking that way. So I'm not necessarily saying those persons were trying to do any harm or anything else of that nature, but it's definitely one of those goofy arguments that I kind of see, and I just kind of chuckle at. I'm like, oh boy, these people are all in for a rude awakening if you think that's how it is. But it happens all the time right here, especially the retail crowd. Oh yeah, 300 PE for a great growth stocks, definitely very reasonable. No, it's not. Just simply because it's trading at a PE of that right now does not mean that's going to be the multiple it's going to be given in the future, even if they maintain those growth rates. This is just a product of a hot speculative market that we're in right now.
Well, if you look at their business, I would say it's quite comprehensive. They did essentially purchase another bank to secure a bank charter. So they do have traditional depository banking, personal loans, credit cards, mortgages, insurance, and all the banking services, but also included in that is financial planning and crypto trading and investments. So it's a very comprehensive business. And then they also have their payment services division, which is also doing very well considering companies like PayPal and maybe Square are competitors. So for what it's worth, the business seems to be growing across its businesses. That's important for price action. And again, that's why I think we've seen the price movement in the last 6 quarters move significantly to the upside. But there's always going to be, the elements behind what's going on in the market as well. Right now, the market is performing exceptionally well. And the backdrop, we're seeing companies, which again are growing like SoFi is, do exceptionally well. But you have to keep in mind, too, that these are high beta names that are still highly short. I think the short interest in SoFi is still around 9%. It's come down significantly. But nonetheless, there may be some valuation concerns going forward. But until we start to see a market pullback, we could certainly see the stock go higher. But you have to keep in mind that the pullbacks can be quite meaningful if they do occur, and they have occurred quite often in the past.
Wow. So I actually agree with him here. He named off all the fintech components where they are seeing massive growth. I wish he just would have said that and directly addressed the question by simply saying, yeah, these are all the fintech components that make it really different than a traditional bank, and we really should be viewing it differently, and then list off all that sort of stuff. That right there would have been a better approach for us, obviously, trying to get that multiple. He is a Wall Street guy, however, so you just got to kind of take that with a grain of salt, and he's absolutely right in regards to it being a high beta name. Like, think about it. It dropped. It was up over 20-something, dropped all the way down to 9, at the drop of a hat. Nothing changed with the business. Nothing happened. There was no, even with the tariff noise and everything else, that really wasn't going to affect SoFi all that much in terms of their business lines, in terms of what they're doing. Because it is a high beta name, he's absolutely correct. It's going to move wilder than others. It does not have a stable share base. It is still firmly in the traders' hands for now. Obviously, we are growing that institutional side, but we got a long way to go here in regards to SoFi before it's not a high beta name, which is good for us because if they continue to crush it on earnings, that means we can get more share price appreciation. And in regards to upside in these types of markets, it's impossible to gauge how far Wall Street's going to pump something before finally, we have some sort of a slowdown, some sort of a correction of some sort, which, by the way, guys, corrections are natural. They happen every, 2-3 times a year on average. We see some sort of a correction in the market. So it's not unusual, but it would be highly unusual to not see SoFi take a significant haircut whenever that happens. But that's to our advantage as long-term buy and hold investors.
That is very true. And I know that today's been even a great example of like the give and taketh of SoFi, but a name that has been a phenomenal performer in today's move, of course, only fueling that. We're up 97% roughly on the year and another 16.5% this month so far. So appreciate it, George, for all of the insight on SoFi, now up about 2.5%.
All right, so let's go ahead and stop the video right there and let's talk about SoFi stock specifically, obviously valuation more importantly, because that right there is the absolute key for SoFi. Now, the good news is because it is a high beta name, just to kind of finish off that conversation from earlier, that you get opportunities, right? We got opportunities in, the mid to low 20s early, just wow, it felt like a month ago or so. It may have been a little bit longer than that, but all of a sudden it was going back into my portfolio challenge and I was adding shares of SoFi once again because it was just kind of an unnecessary dip before this latest run right here. So we added on more shares. So it absolutely gives you those opportunities in regards to that. Now, to the valuation piece of SoFi, and this right here is the critical piece. To me, it is still overvalued from a valuation perspective, and here's why. They have not given us that 2026 into 2027 guidance. They have not adjusted those in more than a year. So until I get that, all of my estimates for future EPS to try to back myself into a valuation for SoFi, which is exactly what we teach in our group there. But nonetheless, and I give you an actual example there with SoFi specifically, how I got to a valuation. Until I get that actual guidance, I'm stuck guessing. And I hate speculating as an investor because speculating just gets you in trouble. I don't have to speculate in order to buy the stock at a great price. Been able to do it now, rinse, repeat from 2022 all the way through earlier this year. Been able to get great pricing on SoFi, and that will continue into the future as well at some point in time. Not necessarily as great as the pricing was prior, but still very good pricing from a valuation perspective. Okay, so we might very well get guidance. Let's say at the end of this year, basically January, whenever they have their next earnings call, they might very well, and I hope that they do, adjust that guidance for 2026 and 2027. I think that they will. I think it will be a nice jump up from what everybody thinks it's going to be. It will still be sandbag because that's exactly what they do, but nonetheless, it will give us a nice jump up. But trying to speculate on what that number is going to be right now is really, really hard to do, and I don't invest that way. I try not to speculate as much as possible, and I just simply remain patient. Now, those of you guys that have DCAs, just keep right on DCAing. I could also see a scenario where we end the year really, really hot, market as a whole, which means SoFi might very well eat up all of that undervalued territory that it may get from an adjustment in guidance until we get there. So yeah, let's say it does run up to, start looking at a 4 at the front, correct? That right there may very well put us into overvalued territory whenever they give us that new guidance. Might very well be the case. Might not be. We don't know what that guidance is. So you got to kind of keep those things in mind and balance those things whenever you're looking at SoFi stock. That although, yes, I want to see a good run out of it. Sure, I would like to see more price appreciation. Great. The reality is that might very well pull a year or two's worth of earnings into the now. And that's not always the best situation to be in. Ask the Tesla shareholders for the past 4 years how it felt to be in that situation. It really, really sucks. Now, obviously, this isn't that same type of situation, not even close to that valuation that we got back in 2021 with Tesla. But nonetheless, it's a scenario to where I like it whenever it's undervalued. That's my favorite thing with SoFi. And then you add that in with incredible earnings performance like we got. That right there is your recipe to make a lot of money in the stock market. And we've made a ton of easy money on SoFi over the past 3 or 4 years here. And I want to continue to do that into next year, right? I don't want it to run up and then just be a stock that basically sits still or, trades range bound for, another year or two in my portfolio. Because I think SoFi has a lot of big things coming, according to management, 2026 and 2027. So I'm excited for that. But you have to understand valuation. You have to understand setting price targets in order to get that type pricing, get those, massive amounts of shares in the $4 and the $5 range, or even in the $8 and $9 range to be able to just ignore the fear, buy, basically not dive all in, but basically be able to make massive buys in stocks. You want to work directly with me and my team of investors and our super investors in our group and everybody else to learn exactly how to do that. Check out the pinned comment down there. Take advantage of the fall frenzy sale that ends this weekend, guys. Get in, start that learning right now because you don't want to wait until that opportunity happens in order to learn this sort of stuff. It'll be too late then. You need to learn it all ahead of time. So when the opportunity comes and Wall Street gets dumb, you can take advantage. Check it out. It's the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.